Hey guys, what's going on? This is Spark from Spark and Trade. Just wanted to go over the five price actions that the market can do at a supply and demand level really quickly. I think understanding this hones in on a certain area that you're trying to, put an order in at, and play, and it kind of gives you some clarity as to how to navigate the market at that level, what you should expect at that level. And expectation is very, very important when you put your money up because we don't really know what's going to happen, but we expect the market to do something. And obviously, we want to be right. So, with these five things that can happen, I think you will kind of start to either, and I'm going to show you like what deciding whether you have to decide whether you're going to get in or not, right? At a level, at a supply demand level. It's just we want to watch for price action, and everyone is going to have a sacrifice. Okay, every single price action that you or every single price action that you determine at that level is going to come with a sacrifice. Let's get right into it. Okay, we're going to use the macro. We're just going to focus on a 5 minute. Not going to get too deep into a whole bunch of theories or anything like that. Um, I could take everything off my chart, but it would just require a lot of work putting it back on. But we're on a 5 minute chart, and I wanted to go. I wanted to go through certain price actions that the market can do at a level. So let's start with the V shape. Okay, the V shape is one of the hardest, and I always say this price action that you can try to catch at a certain level. As you can see, we try to take green lines up, red lines down. Okay, we short red lines and we long green lines. The problem is when do we long it and how fast do we have to be? Well, it turns out you don't have to necessarily be Speedy Gonzalez. The challenge isn't to be the first person in the room, it is to try to limit your risk. Okay, let's always think about that. You don't know if you're going to be right from these five different price actions. My fingers can get picked up. There we go. But if you can limit your risk, you can swing the bat. Okay, at least three times. Three strikes and you're out. All right. Let's remember that. Three strikes and you're out. So let's go. Price action number one. Try to type this out. Price action number one. The V shape. As I mentioned before, the V shape is probably the hardest price action to try to catch at its own because it comes so fast. This V shape is one of the price action where it will come down. Just so you know, this is a demand level indicating that there's a divergence that happened at this level and volume. Wick is indicative of volume. It's trying to stop this downward move. We got no real wick here, another big candle, wick back up, back down, wick back up, right? And this is a full candle. Empty candles are down, full candles are up. Now, this isn't straight yet. Boom. We see this now above this previous level. We don't know if it's going to come back down or not, but the market showed you some strength with more wicks, and you do not know if this is going to be a V shape yet, but boom, you get this one. This candle starts to go up. It doesn't really give you any pullback into this previous wick, and it continues to go up. So if you wanted to catch this V shape, you have to pull the trigger somewhere right here and say to yourself, I think this is a V shape. We do not know if it's going to be a V shape, but we do know that the market, if this is the play that you're taking, the market should not come back down here. It should not. Okay. But if it does, your stop needs to be 34 points. Okay. And the reason for that is because the market respects structure, higher lows, lower highs. If you're taking a demand level, you want to see double bottoms, higher lows. Okay, you do not want to see lower lows because that structure invalidates your setup. Your setup is a V shape in this case, so you really don't want to see the market come back down and break this low. So this has to be your risk, in my opinion. Okay, you can go down to a smaller time frame, create a new risk, but we're looking at the 5-minute demand and we're making the play off the 5-minute demand, so that's our risk. Okay, so the market then actually gives us the V shape. All right, there's a case to say that no, it pulled back a little bit and that's a higher low here and then it went back up. And yeah, we can say that. We can say that. But you never got an entry close to this demand. So this would be what I consider a V-shaped market. And it just kept on. I mean, markets consolidate sideways and then go up again, right? Like, but you could say that's a pullback. I won't argue that. But let's just, for argument's sake, call this a V-shape. All right. So that's the first one I want you guys to kind of pay attention to, right? 1 of 5, the V shape. Okay, and it has to initiate, right? It has to be like, okay, there goes a demand, and then it just created a bounce. So that's your V shape. Okay, we're gonna continue to just kind of go back and look at possible other V shapes to see if we can catch them again in this time frame. I mean, in this kind of short whatever we have here, right? Okay, cool. Okay, here goes another V shape. Here goes another V shape. Sorry, let me just, I'm gonna find it. But basically, we want to take that. I think that might have been it right there. But let me just go back a little bit more. Nah, that's not it. I think this was it, right? It was such a clean one too. It was a short V shape. I want to say this, but that's, oh, here it goes. Here it goes. Sorry, guys. All right, sorry about that. So here goes another V shape. Okay, just to get you familiar with what you're going to like see and why it's hard to catch. The market pumps up, creates a supply. Right about here is where you have to make a decision for a V-shaped play. You'll see the other ones, and it pushes below the previous candle. You got to decide if you want to go in, and the market just ramps down, and that's your reverse V-shape or your short V-shape. Okay, if you take this entry, your risk is now 25 points, right? Or a little bit. We'll call it 25 points just to give it some room. And this thing runs 118 points. Very powerful play. 5-minute supply there. There goes another V-shaped play, right? That we could take advantage of. Okay, we've exhausted the V-shape. Let's move on. So the market does V-shapes, and those are hard to catch because you do not know if the market's going to go up into this supply. And as it's pushing down, you get in here somewhere. Now you have to forfeit a possible pullback. That's going to be 44 points if they hit you. It could be less if you kind of, so this is what I mean by it's hard. You have to pull the trigger fast. You have to think about that and pull the trigger fast and just kind of take the risk. Some people see these supply lines and then they'll just jump in there risking 12 points to make that much. They probably won't even go that far because they're afraid or they don't know that it's going to be a V shape, and they'll get out at a zone like right here, 33 points, which is still good R&R. But you think that this demand, this kind of green money zone, is going to cause a possible bounce, so you just get the hell out of Dodge. And I don't really want to trade, like that. So if I take this V shape, I'm going back down to at least down here where the demand is, where I know that we could possibly get a bounce. And if we break it, great. Now I'm really, really trailing it. But that's your V shape. Okay, that's number one. Let's get to number two. We're gonna try to find what I like to call a higher low setup. This one is very easy to spot. Um, you can see it almost all the time in the market, and this is one right here, right? So the market ramps up. We're clearly this is this is the one that didn't work, but we're going to use this supply. Supply is here. Market comes down, bounces back up, makes a lower high. Market comes down again. This is still a lower high, right? We're still in the same area. My arrow is probably a little too far. Bounces up, still a lower high than this. Okay, we're not touching supply again. If we do, that's a double top. And the market then collapses through demand. Okay, this is tough. We got demand. Oh my God, we're gonna go back up. We don't know that. Boom, we break the demand once. Boom, we break. We have a bounce. Boom, we break it again. All right, so that's a really strong move right here from a lower high kind of setup. Now, when I say let's just say you thought that this was going to be a V shape and you got in right here. Risk is 17 points. Okay, great. We go down 24. We come back to your entry. We go down 44. We come back to your entry, and then we go down 156. You did not know that this V-shaped entry was going to cause this pullback. Okay? If it caused an even bigger pullback, then it just causes a bigger pullback. You do not know which one is going to take or what price action is going to do, but if you decide, you know what, I don't want to take a V shape because the entry is kind of like these things move, right? It happens fast. These are 5-minute candles, but it happens fast. And let's just say the market moves away from the 5-minute area that you want to short, and you decide to get in right here, you got to take a 26-point hit. Maybe that's out of your range for NQ or MNQ, but if you do take it, and this was a V shape, you can get paid at least to this demand, which is 65 points. So what I'm trying to say is, if you take the V shape, you do not know that a pullback is coming, but that's the sacrifice. If you don't take the V shape and the V shape happens, you're gone away from the supply line. That's what you have to forfeit. There is no getting around that. You either take the V shape and deal with a possible lower high or double top, or you don't take it and you forfeit the V-shaped move. Okay, I hope that's very clear to you guys. There is no getting around it. You do not know what's going to happen. You either take the V-shape and you get a V-shape and you win on the move, or you take the V-shape and you sit through some consolidation, some pullbacks. What you want to see is a lower high, in this case from a short, or a double top. You still into play. If they decide to come down, pop back up, and stop hunt, you have to take this stop. The reason for that is because you do not know if this is a trend continuation. And now you're all the way up there wishing that you took that stop. It's not worth it. So let's just take a step back, okay? Take a step back. Market comes up, creates supply. You have a possible V-shaped scenario. Oops, no, it's not. Okay, you're still in the play. Why? Because it didn't break previous swing high, still in the play. And then you win all the way over here. So that's almost 48 minutes. You don't have control of time. All right. I hope you guys really understand that. I stressed it out because that's your second scenario, a lower high. If that happens, you're still in the game. So you win if you take the V shape. You win if you're patient for a lower high kind of entry, okay? Because it never breaks the previous swing high. All right? All right. Cool. Let's go all the way back. See if we can find something back here. All right. So Hegel's like a double bottom kind of play. All right? Market goes, creates demand. You see it bounce, right? We're fall into some demand. You see the market bounce back up. You're like, oh, wow, this could be a V shape. I don't know. Take it if you think it is. But know what you got to deal with. A pullback that's a higher low or a double bottom. The market pulls back to this level. Technically, it's a higher low by what? Like maybe a point or two, right? Nothing crazy. But we're going to call this a double bottom. Okay. And then the market snaps back up. This is play number 3, guys. All right. This is the third thing that the market can do at a level that makes you a winner. We don't know if this was going to be a V shape, so we got it. Market pulls back. Oh my God, just don't break the previous swing low. Whew, a double bottom saves you and you win on this up move, on this long. All right. So like I said, 3 out of the 5, you're going to win. Those are odds that I'm going to take in this market. Okay. Now that I've stressed that out, maybe we can find another kind of double bottom scenario. They're not easy to find because the market rarely, very rarely does that. But yeah, it very rarely does it. But it happens. There goes another like kind of lower high scenario right here. Market pushed down into this demand, popped up, made a lower high, ramps back up. I don't know how high it went, but it basically gave you a good move to the upside, right? Now, during this, the market was bearish. It's important for you guys to understand that. When you're going for a supply and demand, the market looks completely like it's against you. This is the scary part of trying to enter supply and demand. But when you have this type of price action that you're looking for, you can survive a lot of the BS. The market moves down. You know that there's demand by this candle. Okay, this is your low. You know that there's demand. Oh man, the market came back above that demand. Oh, it's straight. You know somewhere right here that you can jump in. If you got in on this V shape, you made 27 points. Your stop should be 35 points. They come down 25 points and then snap back up. So if your stop is 35 points, you're looking for like a 60, 70 point move. They give you 54. You should scale out. We have supply right above you. If we break it, great. If you don't, you don't. But this is why you can survive this move, because they made a higher low. Okay. So that's going to see, we're going to just run through them. You're going to see this over and over and over and over. The time that it takes, who knows? So let's look at okay, here goes like a kind of another higher low. Market came down, came back up, came back down, made a higher low, or, kind of a higher low from this swing low, because that's a real swing low. Then made another higher low, and then it took off. Right? This is what I mean. You never know the type of price action that's going to happen down there, but it's only going to make a higher low, a double bottom, a stop hunt, or a V shape. Okay, you can call it whatever you want. This is clearly, some zigzags before they take off. And up here you have the same high, comes down, bounces off the money zone, comes back, tested it again. So making a lower high. You could probably consider that a double top type of move. Comes back down, then it makes a lower high. Then it sends the market on its merry way. Okay. So again, we see the same price action happening up there. Move into supply, come back down. Is it a V shape? I don't know. Nope, no, it's not. It's a double top. Okay, cool. It's a lower high. Okay, cool. And then you get your move. When it comes, nobody knows. All right. Let's look at a stop hunt scenario. So this is condition number 4. We went through V shapes, lower highs, higher lows, double bottoms, double tops. Right? Those 3 plays, you will win. Okay? Don't know the time. Don't know when. You're going to get money. They're going to take it back, get money, take it back, get money, take it back. Then all of a sudden it's going to go. But you have 3 out of 5 odds where you will win. Okay? So here's where a trader tries to lock in profit. Market goes from a demand. You don't know if it's a V shape yet. Oh, look, it's looking like a higher low. Okay, cool. Let's get in. Let's say we got in right here. Okay, we get in right here. We deal with this BS pullback for 5 points. We're up 11 points. I want to take this back up to this supply. Market ends up going in my favor. Makes another higher low. Goes in my favor. Most traders will get out there thinking, oh, I don't want to give back that point. Makes a low, lower than my entry. Goes back above it. Then this happens. This, ladies and gentlemen, is the fourth one, and it is the one that you have to forfeit. You have to take the stop. You cannot think that this market is going to, bounce. You can't hope that it bounces. You have to take this stop. This previous swing low is your stop. You're not even going all the way down here. Everybody stopped out here. Market wicks back up. Wait a minute. That's the fourth one. That's the stop hunt. All right. If you took it again, you got stopped out again, wicks back up. Wait a minute. That's the stop hunt. So far, if you took this entry and you get stopped out and you saw this happen and you gave it another shot here, you get stopped out again. That's swing number 2. You see it here. You get in again. You make 58 points to the upside after losing 10 points here. Probably, I don't know. I'm too many of these. Hold up. I knew it. One too many. Remove. We got in somewhere right here. So you lost 10 points. Somewhere, I don't know, somewhere right here, I think we got in. Okay. You lost 14 points and you made 57 points. Okay, to the upside. You hit target. You start to realize that this price action right here is all that you're focused on. It's all that you're focused on. Everything else is really just noise. Everything else is just like, man, what's going to happen at this demand level that can make me money? And I know where I have to get out. You have to get out when supply comes in. Maybe you get out right here. I don't know. Maybe you have your stop up there or your target up there and you just walk away. Right here, you would have your target up there and you see it getting closed. Supply came in. You maybe like, okay, double top. I'm out of there. I don't know what you're going to do in terms of how you execute, but I'm just trying to point the 5 things that the market can do at these levels. So this is the stop hunt. I want to actually go back to show you how many times this market will stop hunt your move. Supply comes down, gives you a lower high, comes down, gives you a lower high still from this high. Okay, comes down, gives you a lower high, comes down, right? Makes a lower low. All of this happens. And then boom, stop hunt. And then boom, big move. This one, this is painful because you're trying to take it to a level that's worth your time. I don't know when you get in, right? You're just trying to get in at one of these highs as close to this red line as possible. Is what your job is. So either you're patient for the stop hunt, which means that you forfeit the V shape, you forfeit the lower high, you forfeit the double top, right? And you're like, nah, I'm waiting for that, that stop hunt. And yo, a lot of the times that's probably what you need to do as traders, right? Like wait for that sweet A+ so-called setup. But so we ran through 4 different options. I'm gonna try to keep this video down to 30 minutes. Now the 5th one, let me just exhaust a couple of stop hunt moves. I'm not gonna type it out because it's too much work. All right, so let's go right here. Okay, market comes down, stop hunt, kind of consolidate up there, and then it gives you this big move from that supply. And it had some demands that failed. All right, so here's the 5th one. Just so you guys like kind of see it and know it. Market comes down, creates demand, pops back up, comes back down. You don't know if this is a stop hunt yet, and then it flushes. Okay. This is your 5th one. This market is trending. You stay in there and you're going to blow an account. Because the market came down and gave you a play. Hey, demand is here. You want to take me? All right. Like, we don't know if it's going to work. And as I always say, it doesn't matter. We don't really care. But if you took this V shape and you got up here and then you didn't take profit and the market comes back down, this stops you out. If you had the decency not to get back in, but you're like, oh my God, they're back above it, let me get back in, you get stopped out again. And you need to stop out because this next flush means that the market is trending. So the 5th one is you're wrong. You are invalidated by a trend. If you're taking supply and demand, you're looking for a rejection or a bounce. This is a bounce that failed, okay? You're wrong. And the only way we're determining that we're wrong is the previous swing low. The 5 minute is a good guide because it's not going to spit 1,000 plays a day. But when it does spit a play, your job is to kind of wait through all of this and determine whether you're going to take V shape, higher low, double bottom, stop hunt. Those are the only 4 that you need to be trying to execute on. If you see this happen, you're done. Don't take the play, right? Don't take the bounce at least. Reverse, probably take shorts, and you might get clapped. I don't know, because a fucking a stop hunt might be bigger than you think. I don't know. But at the end of the day, now that we know that we're looking for 5 different price actions at a certain level, we can defog the market. We can say, okay, I don't know which one's going to work. If you're a scalper, you just take what you can. Okay, every time it comes up, oh, I think that's the man I'm in. Maybe you're in back here thinking that you can kind of get in before it. I don't know. Where's your stop? Your stop should be somewhere right here, but it's not. Fuck it. You're like, all right, I'll go like 30 points. Doesn't quite go 30 points. It goes 9 points, and then you get up 34 points. Maybe that's a good strategy. I don't know. I don't play with that one. But over here, let's look at what the market kind of did. Okay, and I'm going to start moving very fast through this. Market comes down, gives you a demand level, right? Somewhere around here, you know that there's demand, pumps up, rejects the red zone, money zone, makes kind of a higher low to this pivot. I'm always using the biggest pivot, by the way, okay? The most recent lows. This line is just an area that I'm looking for price action at. I don't really care if it breaks through it. If it does, that's a stop hunt. But if it holds, that's a high, or if it's higher than this one, that's a higher low. Higher low comes in, market moves up, okay? That's a nice little higher low kind of setup. You win. All right, let's see here. Boom, we come down. Oh my God, that's a stop hunt right here. Let's say you got in right here. You survive that up move because they don't take you out. And now you go almost 78 points to the downside. That's a lick. That's a good play. You don't go all the way down to this, but if you took some out here, that's a good move. That's a really good move. Anyways, market bounces back up and does what now? Stop hunt people who took the shorts. Anybody that got into shorts back here. If they survived this, if they get in here and they survive this, they survive that, they don't survive this. Maybe they do because they're stopping somewhere all the way up there. I don't know. Kind of crazy. I don't think you need to. All right. All right. So a stop hunt happens. You're like, okay, this is it. That becomes your stop right there. You're risking 33 points. Market goes 160 something points. All right. Good move. Now from this previous swing, we move below and make a higher low kind of, right? Almost a double bottom kind of move. And then the market pivots, get a good bounce off of this level. But we're going to focus on fresh levels. Market moves, comes down, moves back up, stop hunts people, okay? And then takes off to supply, all right? Market creates supply, kind of, sloppy here, a lot of wicks. Let's just say, oh man, that's a stop hunt move. I'm in somewhere right here. I survived this lower high. Nice little 20 something points. Survived that one. Go even further, 26 points, et cetera, et cetera. You guys get the drift there, okay? But we know what price action we're looking for in the beginning of this move. And it's usually going to be anywhere between 30 minutes of price action. So here goes a nice little V shape back to the downside. I guess some people would say, no, it bounced, made a lower high, and then it went, whatever. Those are the two conditions where you win. Good stuff there. Here's some double bottom here. You can win on this move to the upside, okay? If you missed this V shape and you were patient enough for that bounce and then you saw a rejection happening here that makes you say, oh my God, that's a lower high from that previous swing. This becomes your stop somewhere above there. That's about 15 points. Let's say you get in here realistically. It's almost like 22 points. No problem. Market ends up going 113 points. Okay. This here is a clear stop hunt move. Oh, it's holding. Let me get back in here. So you get back in. You make 23 points risking 11. That's a good lick. But if you didn't take profit, sayonara sucker, stop him out. If he doesn't stop out, take his soul. Okay? You guys are starting to see the fifth one. When you're wrong, you are wrong. There is no And you don't have the luxury of like, oh, let me see what happens. Let me see if a wick happens. Bro, if they're gonna move up, they're gonna move up. You don't have to stick around there for this. Now, I mean, I don't know where you all right, okay, I don't have to get into it. It goes one, they move up, come back down, higher low, higher low, higher low. Uh almost like a double bottom, but not really, higher low, and then a move back up. That works out. This right here, kind of V-shapes straight back down and then fails to the upside. Now I say keep a bigger time frame because as you can see, if I go down to a 1 minute, man, you're gonna be having plays left and right, left and right. It's hard. Here goes today's move, guys. Now, pre-market 7 o'clock, we have this supply line, lower high, stop hunt, even a bigger stop hunt this morning, and then it triggered a move to the downside. Now you could have been playing the demand, waiting for a bounce, but once that invalidation happened and we didn't see it cross back up, you can jump in on shorts and probably ride this down. Like you don't have to catch it up here, but you can make this your stop now because they didn't reclaim that. So that's almost 20 something points versus, 111 points. That's too big. But it does go 44 points. So that's almost 1.5 R there. If you got in somewhere right there. Down here, we make a move back up from demand, come stop people out, and then the market runs back up, right? So somewhere right here, I think I did actually get in and caught this move up. Obviously, didn't take it the full move all the way back up there, but it was a pretty decent move. Supply comes in here. This is a straight V shape, okay? Maybe people would say, no, it bounces, makes a lower high, and then it went. All right, cool. So it's a lower. You win on any of those, okay? The hard part is if you were waiting for a double top or a higher move to the upside, do you get it? No. And the market goes without you, or you get an even weirder fill. So during this up move, you got to try your best to track this and pull the trigger. If they break this trend line, you pull that trigger, because if not, you're looking. Look. This is already 42 points to the upside. That's a big L. But you do go 85, so you do go 2R. Okay, and that's how I kind of want to treat these levels. So this isn't a fresh demand, but we ended up bouncing off of other levels that I have here, 4-hour levels. So I'm looking for price action down there, especially if there's a demand. We make a low, lower low. So now this is your lowest of the day. We make a higher low here. So now I'm interested, right, in this possible move to the upside. If I took an entry on this wick, my risk is 46 points, and I'm going 102. All right, back to where demand really shuts stuff down. Well, we had one demand that came in, another demand that came in, another demand that came in, and another demand. When that happens, it is really, really hard for me to tell you that the market's not gonna, dump. But as we were doing all of that analysis, we have a play that happened right here. Okay. Market ends up opening at like 6 o'clock. We end up having a nice little drift to the downside. We end up falling all the way into the 42s, created a demand, bounced back up into the red zone. Guess what move this is? That's right, ladies and gentlemen, this is a stop hunt move. And then once that stop hunt move happens and we cross back above, you can enter. Right now, you would have made 23 points in the after hour market. And you could probably still ride this until we go up there, or start scaling out and leave your runner and see if they come back down. And that's how this happens live. It's just a lot faster in the actual live market. So when you see a move like this, you're like, this is what you see. Oh man, this thing is going to V-shape. This is a decision I have to make. All right, so I'll wait for a micro pullback. Let's just say I get in right here, right? Boom, this is my pullback. This is it. I'm stopped out. 10 points. Probably less, more like 8, because that's my swing low. But give it 10. If I see that wick come back in, I'm in right here again, risking now 7 points. I go 22 points. I've done my job. All right, and occasionally you can probably hold or go for more. But I got a whole bunch of other stuff that goes on in my head as to why I probably shouldn't hold this trade. But I hope you found value in understanding that the market can only do 5 things at a level. and your job is to try to choose which one you're going to get into. Um, Very simply, if you wait for a double bottom, you miss the higher low and the market goes without you. You get you don't get the best fill if you decide to, if you decide to wait for that double bottom. If you wait for a higher low and you identify that as a higher low and you're like, oh my God, this is it, let me get in, you have to risk a double bottom or a stop hunt as a stop, right? Well, your double bottom is you're still in the play. The stop hunt, you have to get out because you don't know if that's going to turn out to be a trend that invalidates you. But if the market wicks back up, now you get back in. You don't have to wait for a double bottom. You don't have to wait for a lower high. That is your stop. That's it. So a lot of the times you would think, well, let me just wait for the stop hunt. But we've seen the market do V shapes. You're not getting that stop hunt. We've seen the market make lower highs, higher lows. You're not getting that stop hunt. Double bottoms, you're not getting that stop hunt. But a lot of the times you do. So what you decide to take is up to you. None of this makes the setup different. This isn't I don't think this is a setup kind of thing. You're taking that demand level. You just have to survive the BS that goes on until a move comes. And you have 5 things that you have that you can that you have to endure, right? And decisions that you have to make that sacrifices other decisions. And once you kind of understand that, the fog, the fear at that level is irrelevant. You don't know if it's going to work. It doesn't even matter if it works. We just went through some samples for 10 days and you've seen how many plays the market gave us, and a lot of them work. Only thing that stops you are 2 things. You have a lot of good odds with you. And, it's greed, obviously, is another thing. Execution is another thing. We won't go too deep into that, but I wanted to break down the 5 different things that the market can do at these levels and kind of visually give you an idea of that, right? Like to show you how you can play those things. And it's not easy because, like right here, when the market leaves, you're like, oh man, I want to get into this. This might be a V shape. Market pulls back. You're like, oh, thank God I ain't touched that. Oh, look, it's a double top. Oh man, that's happening so fast. Do I get in? If I don't, I miss the double top. But if you do and it decides to come back and triple top, right? Like these things go through your head, obviously, but I think all of that is irrelevant. What's the best thing to do? Put your order here and let the market stop you out with any of the 2 that stops you out. And if you catch a move like this, you're good. You're good. You're golden. You just won 54 points, right? Isn't that better than trying to predict which one of these are going to work? I think so. You can't really wait for this wick to come in, I think, but whatever. Like, I don't think we need to beat the dead horse anymore, but I'm glad you guys, stuck around. I hope you enjoyed this video. Please like, share, subscribe if you found value in understanding what those price actions, and you can do this for your own, like, you don't need this supply and demand levels, right? Like, let's say I drew, that's all-time high, so you're not really going to see. All right, let's say this level here. This is a level that I drew, 4-hour level. Trust it with my heart. Oh man, market bounce, it left me, and then it comes back down. What price action is that? Correct, is a double bottom. That's a level that I drew. It's not a level that came in from the code. In fact, this level is chop suey. They stop hunt me. But this one here, wicked. And as soon as I see that bounce, I'm trying to get in here, risking that low. And by God, if I just start taking those 4-hour levels, I'm risking 14 points to make 134. And, kind of making sure that we get above these levels. Oh man, some supply there, I might get out, maybe not. Okay, we bounce, okay, good. We're hovering, good. We have a surge, good. Are we going to keep going? Oh, wow, we're still going, right? Like, these levels on the macro are insane. But I hope you guys can see that you can use your own levels. Just look for those price actions at those levels, and you can demystify the market a little bit more. All right, it doesn't have to be, this hard thing that none of us understand. Executing is hard, but you can at least make it a little less harder, a little less hard if you kind of understand that, you know what, all I want to know is what's happening here. All I want to know is what's happening here. But I want to short this, but I'm reading this. Okay. All I want to know is what has happened here, and I want a long down here, but kind of okay. Boom, they stop hunted. Okay, we're going back up. Let me get in. Does this work? It works. Okay. And this is, like, again, it's not gonna be easy. It's not gonna be easy because the market's gonna fly, dude. It's gonna friggin' move. But you can do this if you just reduce the noise. The noise is that the market goes up and down. The noise is that we look at multiple time frame. You can see that the 4 hour time frame pays out, but like you have to wait forever for it to touch that. And we're day traders, right? Like we want to see opportunity that we can take advantage of. And as you can see on a 5 minute, there are countless levels that you can take advantage of, um, if you have a pretty decent system. Um, uh, so yeah, guys, I hope you found value in this. Please like, share, subscribe, and I'll talk to you next time. Peace.